Hello everyone, and welcome to today's Energy Storage News webinar with Grid Beyond on strategies for battery storage market success in CAISO and ERCOT. I'm Andy Colthorpe, editor of Energy Storage News. The US energy storage market has enjoyed rapid growth over the past few years. Recent data from market analysts Wood Mackenzie Power and Renewables shows that from an installed base of 375 megawatts and 824 megawatt hours in 2018, cumulative installed base reached 12,314 megawatts and 37,143 megawatt hours as of the end of 2024. And those are big enough numbers that I'm struggling to get them across. In the final quarter of last year alone, 9.5 gigawatt hours of new utility scale battery energy storage systems, or BESS, were deployed around the country. Of these, a whopping 61% of projects were in California and Texas, home to the California Independent System Operator, or CAISO, and the Electricity Reliability Council of Texas, or ERCOT, transmission systems and wholesale markets, respectively. Now, while other regions of the US are starting to see more activity, CAISO and ERCOT clearly already have the fundamental drivers in place to attract significant investment. However, their attractiveness makes them very competitive markets, with competition and complexity going hand in hand. Strategies for optimizing BESS assets in California and Texas that offer the best return on investment demand both smart planning and responsiveness to market dynamics. For example, while summer fast approaching has been considered a byword for capturing revenue-generating opportunities through peaks in electricity demand, optimization to make the most attractive returns throughout the year has become much more nuanced, as our expert guests today are about to explain for us. From Grid Beyond, we have joining us Ali Karimian, Market Optimization Director, and Alden Finney, VP of Business Development. And as always, interaction with you, our audience, is really important to us, and a Q&A will follow Ali and Alden's presentation. So please put your questions for our speakers throughout the session into the questions tab. We can't promise to answer all of them in the allotted time, but Grid Beyond's team will be delighted to reach out to everyone who asks questions and follow up in more detail as they deserve offline in the coming days. And finally, from me, today's presentation is being recorded and will be available to view at the on-demand section of our website, along with presentation slides. Please allow for a few working days for those to be posted. And so with that, it's my great pleasure to hand over to our speakers, and I believe Alden goes first. Over to you, Alden.
Great. Thanks, Andy, and thanks so much for hosting us. We're always happy to collaborate with you and the Energy Storage News team. Thanks to everyone joining us today at home. Maybe we'll start with a quick intro of ourselves. Ali, do you want to give a quick intro to yourself, and then I'll take Grid Beyond's intro from there?
My name is Ali Karimian, with a PhD in electrical engineering, machine learning from UC San Diego. Went to business school after that at Berkeley. Worked at private equity companies, quantitative investment firms, like one firm, Axel Rosenberg. Worked at Constellation Energy and Key Capture. And for the past 2 years, I've been at Grid Beyond. We've been building all of our platforms for managing front and behind the meter assets, power storage, crypto miners, just anything that can be managed. And we're very happy about what we've done.
Great. Thanks, Ali. And I'm Alden Finney. I'm VP of Business Development here at Grid Beyond, based out of New York City. If you're local, love to meet up in person. We're also going to be at 2 events in San Diego over the next year, the Energy Storage Finance and Investment Conference next month, as well as the Battery Asset Management Summit in the fall, and looking forward to both of those. My background's really more on the commercial side, as well as data analysis for energy markets. Previously at an LX and and been at Grid Beyond for 4 years now. As we've launched into US and other global markets. Grid Beyond is a Dublin, Ireland-based company. We have a dominant presence in the British Isles in the demand response and power storage markets, as well as around the country of the US and around the world at this point. In the US, CAISO, ERCOT are major battery storage markets. PJM, fast-growing market for both demand response as well as power storage. And we're also underway with projects in MISO, SPP, vertically integrated territories in the Southwest and Southeast as well. So we're excited about the growth. We're excited about the partners that joined us last year with our Series C investment round, Constellation, ABB, Clima, Energy Impact Partners, among others, Yokogawa. And we are using the strength of our business and our expertise in battery storage to drive growth across the US and around the world. So wanted to dig in on today's presentation into generating alpha in the various markets that we operate in, and really focus on ERCOT and CAISO, as that's where all of the energy storage activity in the US has been. So Ali, going to tap your expertise here, your background in being a quant. Could you help us define alpha? What is alpha and how should we think about it?
Absolutely. This is going to be a really fun webinar. So alpha is whatever is that you can do in excess of a passive investment. And we're going to have more slides for it in the future. We're going to go more in detail. Don't worry, there's not much in here. So excess is called alpha. If you're smart, intelligent, that intelligence is quantified as alpha. And here throughout the presentation, we're going to talk about how alpha is defined in equity world. We compare it with batteries. And we're going to look into our alpha for different strategies in ERCOT and CAISO. We're also going to look into the real world, not just pen and paper. And that's when integration of the bid optimizer with the OEM software and having our own in-house QSE and scheduling coordinator in CAISO, QSE in ERCOT, scheduling coordinator in CAISO will really help us even get more alpha. And like one thing to remember from this presentation, even if there's one thing, is that markets are getting more and more competitive as more batteries are on the grid. And having intelligence, having tools that can forecast the situation and optimize for revenue, optimize for that alpha can really make a difference. And at this point, they're even a matter of make or break a project financially.
Awesome. And so you talked a little bit about alpha, as an investment strategy. How do we adapt that framework to the power markets? What does sort of alpha look like for battery storage specifically?
Yeah, really good question. Let's start from the basics of even in the equity world. In the equity world, there's always, let's talk about equity of US. S&P 500 is a benchmark. It's a benchmark that there are indices, you can invest in them with much ease. That's why they are like the benchmark. So in the equity world, people can say that, okay, they can leverage up that benchmark by beta, and then whatever you can get on top of that, that's called alpha. Now let's take that framework to the battery world. In the battery world, similar to a long-short portfolio that a hedge fund runs, like you're going to short power when you want to charge the battery, and you're going to long power when you want to discharge battery. So you always have a long-short. You always have a long-short portfolio. That from the grid standpoint, if you don't take the battery efficiency into account, you're always net zero electrons that come in, go out. Of course, there's efficiency, so you're going to lose some electrons in between, like around 10 to 15%, depending on the type of battery, keeping everything simple. So on top of that, benchmark is much more complicated. to define for batteries. And we're going to have more slides to go into details in the future. It's not as easy as, hey, I have an index, I'm going to tap into that. For batteries, there are multiple places that you can generate alpha. Dart spread is the spread between day-ahead and real-time prices. But even, let's think about dart spread. Like the volatility that you see in the electricity market is way beyond for people, what people are used to in the equity market. The graph on the right side here, we're showing the volatility of day-ahead and real-time prices at Houston Hub, and the x-axis on the left side it shows the volatility of the day-ahead and real-time prices. The x-axis on the right side shows the volatility of the spread between day-ahead and real-time. So again, going back to equity board, S&P 500 usually volatility is like 15% per year. Like if VIX is crazy, it's like 40 to 50% volatility. That's you have like implied vol of VIX. But then here, like standard deviation of or volatility of energy is like 100% to 500%, and every month. And even if you go to DART, it's like 10,000% to 60,000%. There's so much opportunity for generating alpha when you're dealing with that level of crazy volatility. And that's something every quant investor is found. People like vol, love vol. And one of the very interesting things about batteries is that the return of batteries has nothing to do with the return of the stock market. It's not even at this point linked to weather. We're going to talk about that. It used to be linked to weather. People used to hedge it as weather, but not even linked to weather anymore. It has a small link, small correlation. So it's great for diversification for institutional investors.
And so we've been monitoring some of these markets, ERCOT since 2019, CAISO since 2021. What have we seen in terms of the dynamics and the duration of batteries going into those markets? Like, how has that changed this volatility equation?
Yeah. So there have been a lot of installations, and that's something that everybody knows about. Our friends at different publications, like 7 more gigawatt of batteries in the last 2 years in CAISO only, and 5.6 gigawatt in ERCOT. That's massive. One of the also interesting measures is the duration, how much these batteries have duration. In ERCOT, still the chunk is around 1 hour duration, 40%. In CAISO is predominantly 4-hour duration because of resource adequacy, 70%. And we think that with RTC+B+, people are going to go back to shorter durations again. Outside of the scope of this conference, if anybody is interested, we can talk to Alden or myself at other places.
And so when I guess we're thinking about those strategies to generate alpha in ERCOT, then how do those dynamics, influence our strategy and what we're doing for clients in ERCOT day to day? Absolutely.
So we said in the very last slide that it seems that weather is having a smaller role. Like what we're seeing more recently, especially in the last 6 months, and this is so, like, market is so dynamic in ERCOT. Like just last 6 months, the dynamics of markets have changed in a way that we are seeing the effect of thermal outages being massive. So which means that it's like markets are not only driven by a cold snap or a heat wave, but also like if there are major outages on the grid, to the point that like we're seeing price spikes at like 9 p.m., 10 p.m., even on weekends. And those are things that were just like those were off-peak hour. Weekends at that time, that's off-peak in ERCOT. And when we're seeing price spikes over there, it just shows to me that how much you cannot just sit back and use old methods for optimizing your fleet. You really need these like sophisticated ways of time series forecasting and capture that alpha. And even think of it like if there's a price spike that's going to happen at some point, right, manually you have no idea if that's a good time to discharge because the price spike may continue in the future. And at that point, if your battery is out of charge and if the price spike continued, you're just going to lose out on that portion of the real-time energy prices.
And I know we've seen that dynamic recently, with some like early morning peaks where BESS, may have, not charged overnight because the pricing was higher than anticipated, but then they missed out on those sort of early morning peak pricing that is sort of uncommon. So a lot of different dynamics here. I mean, I know we're monitoring a lot, obviously, as you can see on this graph. Ali, could you walk us through sort of what we're looking at in terms of net load and other factors that influence how to trade in ERCOT?
Yeah. So the graph that's top right, that shows various percentiles of net load in ERCOT. And net load is defined as load minus free generation, minus generation of solar and wind, because that's what generation is going to get paid, like not free generation. So when you look into, if you adjust for seasonality, you can see that net load is relatively flat. Like everybody talks about last year being very mild, but like when you look into the net load charts, and especially when you add outage to it, like that's when you start noticing that, well, net load has been relatively flat if prices haven't been printing. And we talked about this in our last webinar. Don't want to rehash it, that some of it, price not printing, has been about just like changes in the ancillary market, in fact. And also like much more installation of the batteries as people talk about. So that shows to us, and the graph on the left side, right bottom shows how energy prices have also declined year after year. And those are even the top 95 percentiles, which looks pretty bad. On the other hand, this is like on the left side, we're talking about the spreads, like left top, that's the spread between ECRS and RS. At the beginning of introduction of ECRS, ECRS was always at a premium to RS. And now, although like they're both like very much thin, markets are getting shallower and shallower. Bear in mind that these are average over the month. So they all do have their own spikes in certain hours of the day. And those hours, the detection is when it really matters, like to generate that alpha. If you miss on those hours, then okay, so then you're left really with not much. Similarly for DART, the day ahead and real time spreads, like that, how the predictability of it. Previously, DART used to be generally day ahead has premium over real time. But as market has evolved, more batteries coming online, that spread has been less and less predictable. So you really need more sophisticated traders and algorithms to generate this alpha.
And you mentioned briefly RTC+B co-optimization coming to ERCOT. We can probably do a whole separate webinar on that later in the year as that's coming to fruition. But maybe talk a little bit about the load growth and sort of where the market goes from here. Obviously, last year was much milder, in terms of pricing compared to 22, 23. Do you expect that to continue, or do you expect there to be a resurgence in pricing that folks should expect?
So nobody has a crystal ball. I don't want to say that this year is going to be bad, but at the same time, like things magically happen, and we're going to be all happy if market is good for us as generator in the generator side. However, like fundamentals of the market, ERCOT published a report a while ago that had like the projected load growth that was very much hyped. You looked at like they adjusted it down, but even if you look at the adjustment, there is a decent load growth, and you can see it on the screen. It's interesting on the generation side. The generation build has slowed down massively, especially after Donald Trump took office. There's so much more uncertainty around Inflation Reduction Act and incentives. There are so much more uncertainty around tariffs that impact batteries. Like even if batteries are not made in China, that majority of them are, the raw materials are made in China, the cathodes of lithiums. Then you have high cost of financing, high interest rates, and even if the batteries are ours, like cost of building gas power plants is really high. So putting both of them together, load growth is there. Generation right now is oversupplied. but there's not much getting built right now because of all these reasons on the left side. So our expectation is that if nothing changes in the next 2 years or so, we're going to be back to the cycle of there's not enough generation and like the ERCOT's wild west or wild southwest of crazy volatility. But who knows, maybe this year we're going to have a really crazy heat waves, number of heat waves, one after another, and just great summer for battery generators.
And yeah, let's maybe move over to CAISO, you know, the other major market that we have battery storage assets front of the meter in. A lot of price spike, you know, activity that we've been looking at around solar generation, around, you know, maybe gas units and sort of ramp times. How are you thinking about the short-term dynamics of CAISO right now?
Yeah, CAISO, like it's a very interesting place. Like the ramp, as you already said, Alden, is very rapid. And as you can see on the screen, like on the screen, we have prices of day ahead and real-time prices, 5-minute and 15-minute prices. Day ahead is always mild. It has this rectangular format. Like it's not crazy. When it comes to real time, it's when like the ramp rates majorly like spike up very quickly in like half an hour. And then before you catch it, it's gone. Especially that in CAISO, you have to place bids 75 minutes prior to the start of interval. You can't, it's not like ERCOT, hey, I'm going to wait for it. And then if the price is high, I'm going to catch it. So this is when getting that alpha really matters, like forecasting the spike long enough time before it happens makes a huge difference. CAISO has similar story. Like in the interest of time, I'm going to pass this slide quickly. That net load adjusted for season has been relatively flat, and there's so much more room for generation of alpha. You need to have sophisticated strategies. Well, for quants who are interested like me, like if you want to talk more about battery optimization, you can always reach to us. We're not going to go over how we generate alpha or how the problem you optimize. On the screen, if you want to look into this, go for it. I believe the presentations are going to be shared. So the fun part. We talked about benchmark for equities S&P 500. What is a benchmark? Benchmark has to be passive investment. What is a passive investment in batteries? There's really no passive investment. So from one standpoint, there really is no benchmark. But in ERCOT, the thing that comes as close as possible to passive investment is if you're providing reliability service of RRS, not even ECRS because that gets deployed a lot, RS into the grid and get paid for that. It's not as passive because A, you're dealing still with a real asset, availability matters. B, if that RS is deployed, you still have to charge the battery back. But that's the best thing we have for a benchmark. In the CAISO world, the equivalent of RS would be spinning reserve. Spin prices are much more depreciated. We can talk about dynamics another time. Another benchmark would be if you let CAISO co-optimize the energy for you. It's like you just tell CAISO in the day ahead, hey, just charge and discharge the battery on my behalf. That to us is something that CAISO does. It can be called passive. You still need to do some SOC management for that in the real time so not going into details. But these are two benchmarks that we believe can be used in ERCOT and CAISO. Difference and how we define alpha is the portfolio panel minus the benchmark panel, so the excess return, the excess capital gain, divided by the panel of the benchmark. And if we adjust, we call it alpha and adjust it by the volatility of the cash gain, like that PNL minus the benchmark, what is the standard deviation of that? Like very much similar to Sharpe ratio without the risk-free premium over there or risk-free reduction over there. It's a risk-adjusted alpha. And if you look into our charts on the left side, different strategies in alpha, ERCOT, real-time energy had really high alpha this year. And this is from start of the year until 2 days ago that I ran the numbers. And this is for us, the strategies that we run for one asset. AS, once you add that in fact decreased alpha. AS hasn't been much valuable, and if you have AS and the real-time price spikes, it has decreased alpha. Does it mean it's bad and we don't want to do it? No, it doesn't mean that. We have 2 more strategies here. Both of them with ancillary services, and they include day-ahead energy. One of them physical, one of them financial. One of them backed by asset, physical. One of them doesn't have to be backed by the asset, financial. And you can see that alpha has been very different for them. So if you have day-ahead energy, people talk about there's much more risk, and there's absolute validity in that. There is much more risk that comes with day-ahead energy. Once we adjust that alpha by the risk that is there, you can see that there still is added alpha, like with adding day-ahead physical, especially, or financial, not especially, both of them. Both of them, there is added alpha. And in CAISO, depending on what your benchmark is, if your benchmark is optimization by CAISO, your alpha is like, our alpha has been around 7%. And if you use spin as benchmark, then alpha is 1200%, and we don't believe our alpha is 1200%. So we just believe it's there. If people ask for, hey, what about this as benchmark? It's not that we use it as a benchmark spin. Here we have a very brief example of last week, just different strategies. You can see this slide later if you want. So you can notice that they had financial had a blip on that day that prices spike across ERCOT. So it's an example that you get high return, and absolutely there are days that it has a loss. Your P&L has a loss. We talked all about everything in the alpha generation sense that was all about forecasting. In real life, these are all backed by assets that they fail. They do have failures. They have availability problems. And this is when, like, if you have a really bad asset that just fails every now and then, even the best traders, like, what can they do? Like, there's really nothing much that you can do about it. So this is when you want to make sure that the bid optimizer works in a way that warranty is all in a good place, and that the asset is reliably run. So we started working with a very large OEM, and they're going to start using our software for their bid optimization. And this is where, like, through this interaction of our software and their software, we can guarantee that we're not offering the battery when battery should not be overcycled. So more reliability. On the other hand, we have our own QSE in ERCOT, and SC is scheduling coordinator in CAISO. That gives us 2 things. One, if we want to change our bids and offers, we can do it until the very last minute. We are the interface to the ISO. We don't have to go through anybody else. The second thing, if there are problems that arise, and problems always come up, like, there's nothing in the real world that doesn't have problems. We have direct link of communication with the ISO. We don't have to wait through somebody else and say, hey, can you please connect us? And, like, now we can call. No, we have the link.
Thanks, Ali. And I'm conscious of time, want to get some Q&A. Really appreciate the questions coming in. If there are any others, please do send them in. So I'll go really quickly through sort of what Grid Beyond offers in this space. Obviously, we've been talking a lot about the trading as a service offering that Ali and the trading team manage. That's really a wrap of the operational services that we offer. It includes EMS, it includes short-term modal forecasting, it includes sort of VPP aggregation if you're behind the meter, bid optimization software, both front of the meter and behind the meter. And so we wrap this under our level 4 QSE or scheduling coordinator services to provide a direct route to market for merchant batteries and ERCOT, CAISO, PJM, ISO, New England, NISO, other markets to come. And then I'll also call out, we do also provide long-term revenue consulting. I think more realistic forward price curves based on a lot of the analysis that you saw today, Monte Carlo and sort of stochastic simulation techniques to capture volatility and probabilistic distributions of outcomes. So happy to get folks more information on that if that's of interest. Just to reiterate, the trading as a service really brings together all of the quantitative work that Ali and the team are doing with forecasting of what's going on in the market and connecting that with what's going on with the battery. So better SOC management, better ancillary services deployment, ratio forecasting, and from there, better SOC forecasting over the course of the day, and integrations with select OEMs to potentially overcycle the battery and generate even more revenue. So we'd love to talk with you about this and any of the markets in the US, or connect you to our colleagues that are in the global markets as well. So with that, hope we have a few minutes for Q&A. Andy, I'll tap it back to you to ask some hard-hitting questions of us.
Sure, Alden. Yeah, certainly we do. Yeah, of course we do. So we've still got lots of people logged in. So let's do at least a few of these questions, and maybe we will try and cheat a little bit in terms of that timing by doing 2 questions in one to kick off. How about that for value for money, huh? So we had basically a question about the past evolution of the ERCOT and CAISO markets, and then another one asking about the future. So thanks very much for your question, Edward. Edward asks, how have the 2 battery markets evolved? CAISO containing large quantities of solar, ERCOT more wind. CAISO seems to focus on power shifting to the net peak, and later in ERCOT, batteries appear to be used more for shorter term load following. And bear with me a second. Paul asks, thanks for your question, Paul. What is the anticipated best growth over the next 5 years for both ERCOT and CAISO? Now, you did say, Ali, that you don't have a crystal ball, and fair enough. And I think maybe those questions around, market volume projections are probably, something for the, let's say, the Bloombergs, the Wood Mackenzies of this world. But just in terms of how you see, firstly, Edward's question around, how those market dynamics today are a little bit different, and how they show how the markets have evolved in terms of how you look at trading. And then I guess asking you what your outlook is on what you imagine, or what you expect, or perhaps even what you'd hope to see over the next few years in those 2 markets, if that's a fair way of wrapping those 2 questions up.
So I'll take a stab at it, and Alden, please. One thing that if you have thoughts on it. So because of all of those factors that we already talked about, right, that generation, there's so much more uncertainty in build. Like we have all of a sudden in the past few months, we've seen the slowdown of projects being built. And that makes, so like people have all had like these projections that the build of batteries is going to continue in the next few years. And as of now, there's uncertainty around it. There are conversations about amendments to the IRA in Congress. If that happens, at least there's going to be some certainty. Like at this point, everything is so uncertain that we cannot reliably say like we have a forecast. It looks like we're going to have a slowdown of building. And that's going to be really good for people that already have assets on the ground, because that gives them breathing room. So that when load catches up, and it will catch up, they're going to have like 1 or 2 really good years before other people start building again.
Sure. And Alden, do you want to throw in some thoughts on that?
I think that the CAISO and ERCOT grids, obviously very different. Both are characterized by high and growing penetration of renewables. CAISO due to a lot of sort of state level incentives, very high energy pricing. ERCOT do a lot to the ease of building projects in Texas. So with that, the market dynamics are different. I mean, obviously you have the RA construct in CAISO as well, that's providing a large amount of revenue to battery storage projects, as well as other energy assets that make it a less volatile market than the ERCOT power market. So yeah, definitely a lot of different dynamics going on, but it is interesting to see sort of how that build for peak question is being addressed through, RA capacity or not. And also, how we fulfill that sort of with the must offer requirements that we have with assets in those capacity markets. Yeah.
Excellent. Thank you very much. And moving on, I think it's a slightly more general question across potentially both markets and indeed all of the markets, I guess you could say, that Grid Beyond optimizes across. So thank you for your question, Maddie. Maddie says, could you please give examples of sophisticated versus non-sophisticated forecasting models? And Ali, it's a word you use a lot to describe, what's needed now. So I wonder, from a historic point of view, was there ever a point in which an unsophisticated model would have been enough to optimize? And how's that kind of changed? And how would you kind of define that sophistication versus, let's say, less sophisticated or unsophisticated?
Yeah, good question. So I would say, let's go through an evolution of sophistication. Like 1 degree of, generally when people talk about energy forecasting is that they come up with a shape. They use historical data to come up with a shape of, hey, this is we expect energy prices to peak at 7 p.m. and that's going to be every day during the week, 7 to 9 p.m. And I'm talking about ERCOT, and that based on that, we want to plan to discharge the battery. 7 p.m. we're going to start to 9 p.m. That's one that we're going to keep doing every day. Let's take this 1 step more sophisticated. That's when you start adding in more parameters such as load. You start looking at the load forecast that ISOs provide or other providers provide that. And we say that on days that there are going to be more load, I'm going to even cycle the battery more. I'm going to plan for that. And they're all really good ways. The people have had success with them absolutely in past, and will continue to have with them to some extent. This is when you start adding a little bit more revenues now into the mix, with ancillaries not being valuable. And if you don't want to only rely on the real-time energy, you also want to add in the day-ahead to the mix. That's adding day-ahead energy to the mix is when you will really start running into problems, because it's a risky move. You need tools to not only try to forecast the direction that day-ahead versus real-time is going to clear, and based on that, place your bids and offers. And also, if you have a risk appetite, for example, that is not much, you want to make sure that if you have an offer in the day ahead, you want to make sure you can cover for it. That's going to impact how you plan your schedule for real-time energy. These are all places that they're not going to be just, hey, I'm just going to have an Excel sheet and put everything on Excel anymore. You need a proper optimizer. You need proper time series forecasting to go into the optimizer.
Maybe I'll just jump in with sort of one joking strategy and one, I think that's really, something we think about a lot right now. I had a friend who was one of the early battery traders for a large portfolio in CAISO. And when I told him years ago that we were building a CAISO battery bid optimizer, he said, why do you need that? You look outside, and if the sun's out, you buy. And if the sun sets, then you discharge until you're out of juice. And that's, optimization in CAISO. And we still encounter folks that are using that sort of simplified strategy because it works, right? The huge solar duck curve, the fundamentals driving that strategy are actually sound. But what we've found, and what Ali presented on sort of generating alpha, is that by adding in those ancillary services, by sort of strategically managing your state of charge as well, and as well, against your RA obligations, your must offer requirements, you can generate significantly more. And, some of the asset sizes that we're working with, hundreds of megawatts, even a 7% uplift, translates to, a huge amount of additional revenue and profit for the operator. And then I guess, maybe getting a little bit away from the sort of joking strategy, there are really, strategic considerations around managing state of charge, as well as getting mitigated by the CAISO grid operator that you have to bring into account in how you're optimizing strategies in CAISO. So that's something we're happy to talk about offline. But yeah, you do have to, really strategically manage that state of charge to ensure that the battery is in the best position every hour of the day.
Excellent. That's a great example, Alden, I think, and yeah, really interesting to think about. We're almost out of time here, folks, but maybe let's just try and do one or two more quick ones, I think, if that's all right with everyone. So Bill's asking about a question about let's say the market interaction between batteries and the ramping of gas power plants, which I think you guys did refer to briefly, but I don't know if you want to add any more color here. So thanks for your question, Bill, who asks, what is the value of instant power of storage to hybridize the operators of natural gas peakers by providing just a 15-minute bridge from cold start to full power? And I don't know if you want to expand on kind of the use cases there beyond just that cold start as well, but certainly the market interaction, let's say, between batteries and gas.
I can take that one. One thing that we've noticed in the past few weeks, because just there's so much dynamic changes in the market, is that real-time energy peaks in the evening especially tend to have two humps. And the first hump is like what Bill has been talking about. It's like all of a sudden demand is going up, or net demand. And until thermal generators can catch up, there's that first hump. And then thermal generators generally catch up, that first hump comes down. And usually, and not always, but sometimes there's a second hump that is way larger even. And we've seen that many times last week. And what seems to happen is that batteries that are pretty sizable, like they have become this marginal unit at this point, they run out of charge, and then they don't have charge anymore to sustain discharging. And that's when power prices for the second time start rising. So this is an example that two humps can be driven by two different fundamentals of generators in the market that are providing electricity.
Excellent. Thanks, Ali. And I think final one, I think it's only fair to ask this, although it is a slightly, let's say, wonky question, you could say, around the market, but certainly an important one. So Ram, thank you very much for your question. So Ram's asking, how's the ERCOT strategy for BESS shifting with respect to the upcoming launch of RTC+B later this year, and that is real-time co-optimization plus batteries? Yeah.
So as you may know, under RTC+B, the day-ahead market of ancillaries is going to exist. It's just going to be financial. So the same way and the physical ancillaries are going to be on in real time. So it's going to be very similar to today, that we forecast DART for energy, and based on that, we have like a participation in the day ahead. That's going to be mainly financial gain, and participation in real time for actual discharge. And the real time can be a hedge for day ahead. So the same construct that was only for energy is going to carry over to ancillary services. Generally, the expectation is that real-time ancillary prices are going to clear lower compared to day ahead, because the premium that people collect in the day ahead is going to dissipate. And the reason is that, like, in day ahead, people always ask for extra premium because they may be unavailable. But in the real-time market, every 5 minutes running, that premium is going to be gone. So if somebody just wants to use the real-time market, they're definitely going to make less money compared to even today, for sure. And that's when it gets back to, you need people like us who can come in there, say that, hey, I'm not going to only look into your physical participation, but also financial line item in your portfolio that's going to be driven by your day ahead, both ancillary and energy, to help you boost that revenue. Otherwise, that revenue, I'm very curious if we go like this, if this revenue is even going to bankrupt some of these portfolio companies under RTC+B if they don't move to new ways of like also adding some financial trades.
And maybe I'll just add quickly there. So we are actively in a pilot with ERCOT on their RTC+B right now. We're actively preparing for this for the assets we work with, as well as our clients' sort of regulatory affairs team. So to the extent that you have additional questions on RTC+B or are looking for an operator to manage the new evolving paradigm around RTC+B, please don't hesitate to reach out, and we'd be happy to talk more about that.
Excellent, excellent. Well, we might, Energy Storage News, we might hold you to that, Alden. So
please do, yeah.
Be prepared for a potential invitation or even a request for some information and maybe a guest blog or something along those lines. Okay, folks. Well, that does very much wrap up our time for today. We've run a little bit over the allotted, but I hope it was interesting, and it seems to have kept everyone's attention nicely throughout. So yeah, it just remains for me to thank very much our speakers today, Ali Karimian and Alden Finney. Thanks a lot, guys. But also, most of all, to thank everyone in the audience. I've said it before in webinars, it's such an exciting space to be working in. It's not just, a cleaner way of doing things, but I think increasingly, to borrow Ali's phrase, a more sophisticated way of doing things in energy and power markets. So I think there's a lot to think about going forwards for the future. And yeah, with that, just remains for me to say goodbye and thanks once again. Bye, everybody.
Thank you, Andy. Thank you, everybody.